Where does soft commodities stand in relation to hard commodities?
Okay.
Growth potential.
Yeah. Okay, so, and I guess the background to this question is that there's a lot of people that see how quickly the likes of the Chinese and especially the Indian populations are growing and say, well, therefore, demand for soft commodities will rise over time and therefore that's what we want to invest in. Would that... Yeah, you see, I have some sympathy with that view. The trouble is it's a sort of Malthusian view that's been wrong since Malthus predicted it more than 200 years ago. So, and the reason why it's been wrong is because essentially agricultural efficiency has exceeded the growth in population. Now, you could argue that most of the agricultural improvements you saw, particularly in the 60s and 70s, are the things of yesteryear. In other words, it was quite easy to get yields on crops on a vast variety of commodities up when efficiencies were so low to start with. And it's quite difficult to see, goes the argument, that those sorts of continued improvements over the next 10, 20 years. Again, I have some sympathy with that. Again, it'll be very much dependent upon what you manage to do with GM and all those sorts of things. And there's a whole question about what global warming does to yields more generally. But I am, as you might gather, I'm a little bit of a cautious soul. I am a little bit cautious about using an argument that is intuitively extremely plausible, but one that has in fact turned out to be wrong for the last 200 years.
But you're so cautious that I was struck listening to you as to what you believed about, for example, whether it's hard or soft commodities, the direction they're going in.
Whether...
Go on, give us a forecast. I mean, tell us what you know, would you put money into commodities? Soft commodities, hard commodities?
I would not put money into commodities at the moment, no. I think the prices of those are going to fall. I think that stock markets are going to fall, and I think that bond yields will stay very, very low. But that over time, particularly when it comes to emerging market debt, then because of the fiscal problems in the developed world, then you will see the yields attached to emerging market debt fall quite sharply relative to developed world.
So what would you put money in the short term?
Corporate bonds.
Corporate bonds, okay.
There you go.
This question is to the panel, to all of you. There's been a lot of talk in the last 12 to 18 months of global convergence of legislative frameworks, regulatory oversight, accounting frameworks. What is your take on what this means specifically to the BRIC, in the context of the BRIC economies? And is this a net positive or a net negative for Jersey?
Geoff, you can start us off. You look like you're eager to go. And then Richard.
I'll have a go at that. And there might be somebody interesting for you to take the microphone in the audience to, because we've got the Director General of our regulator here, I think, in the audience, so he might have quite an interesting take on that. But my initial stab at it would be, I actually think there are some quite strong tensions in regulatory development around the world. We had the G20 Financial Stability Board commissioned with looking at international systemic regulation with the idea of a sort of a cascading down and tiering process, and they going out to people like IOSCO, IAIS and others, we've got the Basel situation, and that you would get a sort of a collective planned effort at addressing regulatory shortfalls. But what we seem to be almost, if I could say, degenerating into is bottom-up solutions coming from individual sovereign nations and trading blocs like the EU, who now seem to be almost competing to deliver what they believe is the best regulatory model, and we're now getting, I think, tensions between the G20 players. People like China, India cannot understand the drive for some of the measures that have been proposed for banks, say, because they have very well capitalized, very strong banks who've not had any real difficulties or problems through the financial crisis. And I think they see proposals such as banking levies, transaction taxes as a Western solution to a Western problem, but don't impose it on us. But John is the expert and probably have a better view than I.
I'll come to John in just a second, but Richard Teather first of all.
I think there's a huge opportunity for Jersey here and a huge need for places like Jersey, because Richard talked about the flights to quality, but there's definitely a huge demand amongst the European, the developed nations for high-quality regulation in financial services. which is what Jersey can operate, and particularly when you're acting as an intermediary between a European investor, say, and an Indian or Chinese investment opportunity, there's going to be an increasing desire and, in fact, regulation amongst European nations that that collective investment scheme has to be in a properly regulated and checked environment, and that you won't just be able to go direct to India because they won't have the necessary approval from the European authorities to do that. So I think Jersey's conduit intermediary role is going to be more important, not just in providing the tax benefits, the financial services, but in terms of providing the regulatory approval as well to get into these markets.
Right, John Harris, the Director General of the Jersey Financial Services Commission. I think the thing that I've really noticed in the last 2-3 years on the global scene is the advent of Brazil, Russia, India and China as G20 members really flexing their muscles and making their voice heard about regulation in general. I think the point is that's been made that to some extent that's broken down in the European and the US zone. That's true, but if you want an example of where China's voice in regulation worldwide counts, then you only have to look at what happened with the OECD whitelist process at the G20 in April 2009 here in London, where Chinese pressure to keep Hong Kong and Macau, its two territories, off any grey or black lists and really be treated as a special case, a special category, was something that they were able to force through in that gathering. So that's a very good indicator, and there are several more where these four countries really matter, and they're really making their voice felt in the regulatory scene. Now, for a centre like Jersey, looking to market its services into these jurisdictions, these are controlled societies in many ways with a great respect for authority and hierarchy. And one thing that we have to be able to do is to sell our regulatory model to them, because their businesses won't do business with our businesses if they don't feel that their regulators don't have a respect for what we do and an acceptance of our standards. So it's the same old story. We need to be right up there with international standards because they count every bit as much, if not more, with the Chinese and the Russians and the Indians as they've ever done. And that's very much why I like to try and accompany Jersey missions to these countries, because it's a very important part of what we're doing is to get ourselves understood and respected by their regulators. So it is an opportunity, but there's some good groundwork that has to be done first before we can really maximise that opportunity.
I wonder, with everybody, the UK getting tougher and UK, France sort of trying to outbid each other on imposing bank levies and clamping down on banks, whether, Senator Ozouf, there is increasing pressure on Jersey to provide a tougher regime, whether they look across at you and say, look, we don't want, we've got to impose this for political reasons, but we don't want our London to lose out to places like Jersey.
I think probably the slightly uncomfortable thing is that Jersey stands in terms of its own ratings, in terms of regulatory standards, higher than some OECD members. The IMF report that was a full assessment of Jersey, almost, I think, Geoff, we came out as number one in the world on various different criteria. I think that we have the standards in regulation which almost, dare I say it, global leaders in some areas. We regulate some activities, and the quality of the regulation stands and has been assessed, as I say, by the IMF. Also, the crisis itself gave us an opportunity almost to separate out. I agree with the comments that there will be a flight to quality in terms of IFCs. And certainly Jersey's had an opportunity with a Foot report, which was the UK-led government. The previous government did an assessment of all the Crown dependencies in the overseas territories. And again, Jersey came out extremely highly in that assessment.
Vince Cable, of course, the new business secretary, is no great fan historically of the Channel Islands position. Has he come across your radar in the past few weeks?
Not yet, but personally. But I think that we have a long-standing cooperative relationship with whatever UK government exists, and we're certainly looking forward to developing our relations with the
He doesn't
UK
like
coalition.
the tax position of the Channel Islands, though, does he?
He certainly had some difficulties in relation to some of the banking failures that existed in some offshore centres that didn't happen, weren't a feature in Jersey. We've not had a banking collapse in Jersey for as long as anybody can remember. So certainly there were criticisms by Mr. Cable around some of the banking collapses, but that wasn't a feature of Jersey. And certainly, if I have the opportunity, I'll be reinforcing that with Mr. Cable.
Have you invited him over?
We have invited Mr. Cable over, and indeed we've got an engagement programme with the UK, and I can say that the relationship so far is a positive one, a cooperative one, and certainly I think the UK understands the benefit of having a well-regulated, trusted offshore centre such as Jersey.
You didn't say no.
Sorry?
You didn't say no. I mean,
I think we're still in dialogue. That was previously to the election.
Okay. Geoff, we were just talking about Hong Kong and Macau. Why should somebody in China come to Jersey when they've got Hong Kong and Macau sitting right by them that they're familiar with?
I think people tend to book business and look for advice in centres that are proximate to where they're actually wanting to do their business. So if you've got a Chinese company looking to come to Europe and to buy business interests here, raise capital, they will tend to use a proximate market that understands the systems, the frameworks, and has an acceptability to the machinery they're going to use. So as an example, the listing vehicles, Jersey companies would go straight onto the UK stock exchanges, straight onto the Amsterdam Stock Exchange, no additional due diligence, recognised as equivalent and equal. So it's just much easier and much more efficient to use a centre that has expertise, connections, flows of dialogue and partnerships, such as London and Jersey have.
Okay. And on that, are you thinking of increasing, you talked about you've got a Hong Kong office, and are you thinking of increasing that representation out there?
Well, we're thinking of increasing representation full stop. So we're going to open in the GCC in India later this year, early next year. We are going to boost, hopefully, budget permitting, some of our resources in Hong Kong to enable more activity to take place. And we have been investing in a dialogue with the Hong Kong authorities about accessing their financial market machinery. So Jersey has been admitted fairly recently to the Hong Kong Stock Exchange. And we believe we can build a flow of reverse business from Europe to China by using Jersey companies as vehicles to raise capital from the huge savings pool that there is in Asia. I mean, many of the European markets actually static, a little bit moribund, and there is a lot more investor pool to look at in Asia than perhaps is in Europe, and we're tapping into that stream now. The first company to do that was Rusal, a Russian company, and West China Cement have recently announced their intention to delist from AIM and go to the Hong Kong market to raise fresh capital.
Right.
Another Jersey company.
And Alan Binnington, it's interesting to hear you talk about sort of the familiarity with the products. It must be quite a hard sell when you're talking about such detailed, difficult structures.
Yes, I think we've certainly had this experience in the Middle East, that you don't go to those jurisdictions and treat these structures as products to be sold almost out of the sort of suitcase. What you have to do is to develop a strong degree of trust with a family, for example, and then really provide solutions to some of the difficulties that they're facing. So when you have family businesses, one of the major difficulties is transferring not only the management of that business to the next generation, but also the economic benefit from it. And that's where a lot of structuring comes into play. But what you can't do is just turn up on the doorstep of some Chinese family or an Indian family and say, right, I have the solution to all your problems. It's a very lengthy process where you have to understand the family's needs, but perhaps more particularly, they have to recognize that you've got the expertise to assist them. And trust with the small t, not the product, is very important.
And Moron's business with emerging markets, is it much greater now than it was a few years ago?
Yes, we're seeing significant interest in structuring from the emerging markets, but again, it's a lengthy process. You don't win business in those jurisdictions overnight. You really do have to build up the trust of the families, and that really is as it should be.